And let's look at the market. Stocks higher on the first trading day of 2018. Let's look at the Dow, NASDAQ, and the S&P 500. Rip-roaring a year it was in the past. Meantime, there's optimism going into 2018. Business leaders optimistic, thanks in part to that Republican tax reform, as well as President Trump's vow to cut all the unnecessary red tape. So will this translate into higher wages and more jobs? Here with analysis, Belpointe chief strategist Dave Nelson. We're already seeing that, Dave, but you have a market, a stock market, and even a bond market that is looking very richly valued. So where do we go from here? Can this optimism and continued economic growth translate into significantly higher stock and even bond prices?
Well, that optimism you're referring to, Dagan, that actually started, post the election. And we actually had it through most of the year. And I think to a large part, it wasn't just about tax reform. It was because this administration was starting to roll back a lot of the regulatory overreach of the last decade. And there's a lot of agencies out there that don't like that. Agencies are about money, and the one thing they like is regulations. And this administration is kind of changed that. I do think it translates into better markets for next year. I don't think we can make, have a, 20-plus returns like we did last year. We've had a lot of multiple expansion in that time. But we're going into next year with possibly $150 in S&P earnings next year. That's 15% year-on-year growth. So I think 8–10% is probably a reasonable number for the S&P this year.
But is the real wild card, and this goes, Dave, goes to my discussion with Steve and even Colonel Peters, Lieutenant Colonel Ralph Peters, about the amount of money that this government is spending, that we doubled the debt over the last 8 years of President Obama's term. But again, we're running deficits. And is the real headwind potentially higher longer-term interest rates? We know that the Federal Reserve will likely continue raising short-term interest rates, but higher long-term rates is not something that we've had to deal with really for the last decade.
It's an important point, and we are coming to the end of the experiment, as you say. We have a Federal Reserve right now that has moved on a path of normalization. We're still not looking at much inflation yet, but at some point in time, the long end of the curve is going to start to rise, and as those rates rise, there'll be competition for stocks. But the main part of this package here, and what we're trying to put forward, is really growth. And growth solves a lot of problems. Now, I'll grant you, if we don't match that with fiscal restraint here in Washington, then of course, you could create problems down the road. My hope is that the administration is going to start to address that. Steve mentioned it earlier. Number one, with a bullet right now, the first thing we have to pass is a budget. And it's going to be difficult in the backdrop of an election cycle.
I guess the higher interest rates and some wage inflation would be welcome. In this, I was talking about it as if it's a bad thing, and higher longer-term interest rates could be bad. We're looking at the December jobs report estimate on average hourly earnings growth. But there was a story in the Wall Street Journal today about you are seeing, and I'm not talking about increases in minimum wages, which is government directed. I'm talking about real wage growth in places like Denver and Minneapolis, where the job market is so tight, employers are hiking wages, hiking salaries for people.
I think the backdrop over the last couple of months, and certainly this tax overhaul package, helps set the stage for that. You mentioned wages going up. You've seen several companies announce in the last few weeks here on the heels of this tax reform package that they're raising wages, and some very cyclical companies like Federal Express have come out and dramatically raised guidance, and they're all pointing to this tax overhaul, going from 35 down to 21. That's a big relief for large and small companies here in the United States.
AT&T and Comcast, Fifth Third, Bancorp, Wells Fargo, all handing out bonuses. Boeing promised to invest more money in its own workers. So already you see the benefits of that tax reform even before 2018 started. Dave, thanks so much. It was great to see you.
Thanks for having me.